All right. Welcome back to another episode of the Real Estate Investing Club. In fact, this is the first episode of 2026. You guys, we usually send these episodes off about 2 to 3 weeks after we record, and so in your guys' real time, this is the end of January. But in live time, when we're recording this is January 2nd, 2026. So I hope you guys had a great New Year's, a great holiday with your family, with Christmas, everything. It was great for us. I ate way too much food, and I'm actually excited to get back into the grind of it. So here we are, and welcome back to another episode. We got a good one for you with Ron Rohde with us on the podcast from Bulletproof Lease. Ron, the Bulletproof Lease is a 31-page residential lease specifically for low-income housing, which is what Ron excels at. He had a long career. He's actually retired down in St. Augustine. We were just talking about that area, how beautiful it is. And side note, I did not know, Ron told me, that is the oldest city in America. Who would have thought in Florida that they would have had the oldest city in America? But that's what we're here to talk about, Ron's career in low-income housing and Bulletproof Lease. So Ron, thanks for hopping on the show.
Gabe, thanks for having me, man. It's a blast. I'm excited to be the first guest of 2026. It's going to be a great year.
There you go. And yeah, before we get into, we'll get into your story, but I want to just take a second and talk about that St. Augustine fact. How did you learn about that, and where did that come from?
I know. Well, so 1565 is when it was, which is predates, Jamestown. It surprises a lot of people because, Florida, strip malls, 20 years old is considered ancient here, right?
Yeah.
Not in St. Augustine. And they lean into it. So it's a cool city. Yeah, they really lean into that title.
Yeah, well, you learn something new every day, that's for sure. I told you before we got on here, we always like to start with stories. We like to hear how people got to where you are. It sounds like you've had a long career in real estate. Now you're down there in St. Augustine. So why don't you take us to the beginning of your career and tell us how you got here?
Yeah. So my story's not that exciting. I mean, I'll be 60 next year, so I'm a little up there. And my wife and I got our start in Los Angeles decades ago. We're from Connecticut, but we moved to LA, two broke kids, and just figured if we're going to be poor, let's be poor with palm trees. That was our thinking. So we moved to Orange County, California, and the abbreviated version. I got a lucky break early in life and ended up going to work for, at the time, a very small company. Today, a multi-billion-dollar company. But my boss was one of the founding team members of the Home Depot, and so it's like I was a commission-only sales guy, nothing like that. But I kind of got to learn a philosophy, and it changed my life. And that was, when my passive income exceeds my monthly obligations, then I have a credible claim to financial freedom. That's a pretty big word salad just to say, I just need to create some passive income. So, spent years there, did very well. And then I wanted to create passive income by buying multifamily buildings. But of course, you try to do that in, most of California, certainly Orange County, you'll go broke quick in terms of cash flow. It doesn't pencil out. So we packed up like the Beverly Hillbillies and moved back east, because in the Northeast and a lot of areas of the country, but specifically Connecticut, you can really buy these small multifamilies that just the cap rates are 9 and 10, with GRMs of 3.5, and of course you're going to earn it, right? Because it's low income housing. And I think Willie Sutton said it best why did you do that? And well, that's where the money's at, right? So we moved there. I took a corporate job. And then in 2007, 2008, when the economy crashed, well, America was on sale. And the numbers were just insane in what you could buy these things for. But while the property values were declining, one thing that didn't decline was rents, right? So for every 1% tick in the home ownership rate downward in this country is 1 million new renters they can't buy. So in bad times, specifically then, it's usually a pretty good time to be a landlord, because the values are declining. Well, the rents are, if not accelerating, they're stable. So I quit my job because, the only way to get my 401k was to quit my job. So I think Tony Robbins said it best: if you want to take the island, burn your boats, right? So I just went all in. I mean, pushed all the chips in and said, well, I'm a high school educated nobody, but I've amassed a little bit of money. And so I paid the taxes. paid the 10% penalty because I wasn't 59 and a half. And so my pile got, 40% smaller. So I just started buying. I didn't know what I was doing. My wife still had a job, so I was able to get a mortgage through her. So we were just putting 25% down. And after 3 or 4 buildings, I was broke. And I thought, well, what was a good run, but and then I joined my local RIA, the Real Estate Investors Association. And that's what everybody should be doing, by the way, in the beginning of their journey. Join your local RIA. And they taught me how to buy without banks. And I was like, wait a minute. I thought you had to go to a bank. Thought I needed tax returns and W-2s and all this stuff. And then when I learned how to do that, then I just went crazy. I bought everything. And did very well, made every mistake in the book, I got to tell you. But my wife and I ended up at our very peak owning and managing close to 800 units. And they're not sexy. I mean, to be clear, but they're high cash flow, high headache, all that comes with that. So you can't let it get away from you. So I did that for a number of years. And about 7 or 8 years ago, I actually bought the RIA that I joined. The owners, my original mentors, they were getting up there in age and wanted to pass the torch along. And I was, along with a few other people, were under consideration. And, me and my partners, I should add that I had 2 partners. We bought the RIA. And it was cool because that was the first time in my life that I kind of got to move the needle on changing people's lives. And that's just never something I thought I would care about. And sold that about 6 months ago, along with most of our properties a few years ago when we moved here to Florida. And so about 6 months ago, and now I sold all my properties and I sold the RIA. And I'm sitting around with nothing to do. And my wife's like, you got to find a hobby, and we're blessed. We live on a kind of private lagoon here. And so I started a TikTok channel. I think I'm the world's oldest guy on TikTok. And I don't know what I'm doing. I don't know how to edit a video or nothing. So I started doing a TikTok video on tips and tricks for low income landlords. All these little things I've learned over decades, like find the master water shutoff for your building, wherever it is. In the Northeast, it's in a basement. Midwest, it's in a basement. Find it the day you close on a building and paint it bright orange. Because one day a tenant's going to call going, there's water leaking. What do I do? Go turn the bright orange handle,
Exactly. I've never heard that as a tip, but that is really, really
so I've got hundreds of those. So I do them on TikTok and it's kind of taken off. And so people were like, well, how do I get a hold of your 31-page lease? I'm like, I don't know how to sell online or anything. So I figured it out and blah, blah, blah. So, I've been doing that. It's a hobby. So here I am on a podcast with you today, Gabe.
I love it. That is a very unique piece of advice. Not something that I don't think I've ever heard before, but it makes a lot of sense because you want your tenant to be able to actually turn off the water when there's a water leak, or else that
or even a contract
could become a very big problem. Yeah.
Yeah. Right. So think about it. If you're not at the property, which you're probably not, and you get that phone call, try to describe to a tenant, especially if you own multiple buildings, where that one magic handle is in a room full of handles. Right. So, and just all kinds of things like that. I just did a video the other day on my TikTok channel. If you have a drug problem, right, and in low income housing, you get a lot of drug dealers, and that's usually manifested that you can see sneakers hanging from the telephone wires, right, and that's one of the telltale signs. And years ago,
why is that? I do know that as a fact.
Yeah.
Why is that?
Because it lets the public know it's kind of it's their sign they're hanging, if you will, right? Hey, buy drugs here, and yeah, So I had this building years ago, and I've learned this from another landlord. But years ago, I had this problem, so I did a video on it, how I got rid of all the drug dealers in my building. And how you do that is you send a letter to all the tenants in the building. Dear valued tenant, I apologize in advance, but we have partnered with the local law enforcement agency to train their canine drug sniffing dogs. So they're going to be in the hallways, day and night. They won't come into your apartment, but they're going to be everywhere. So we apologize about the inconvenience. And they'll just scatter like cockroaches. They'll go, yeah, and just, yeah, it's funny. Yeah. But it works.
Yeah. No, those are, when you are dealing with less savory customers or less savory tenants, you really do have to come up with smart solutions to the problems, and that's a really smart one. I like it.
Yeah, yeah, you do have to in that business. Otherwise, you'll go broke pretty quick.
Yep. So through your story, there was a lot of things that you touched on, and I want to go into. Just real briefly, you talked about buy without banks. Let's talk about that. And then you talked about you had about 800 units. So and they're all low income. So one of the big topics that comes out of that for me is how do you do the asset management by and still not pull your hair out, because I own mobile home parks. I know it can be a big problem. Sometimes you'll have issues that don't generally come up with Class A apartment buildings. And so
Yeah,
how do you reduce the headache? And then your REI that you met, REIA, Real Estate Investing Association, you both were a member and an owner. And so I'm curious what the difference is, what the benefits are. So let's start with the first one there. At the very beginning, you mentioned you learned buying without banks. That is a very important topic for real estate investors. You're going to, like you mentioned, and I learned very early on, you can buy maybe 2-3 properties, commercial properties with your own money, and then you're dry. You got nothing left. You got the cash flow coming in,
that's
but you
it.
don't have the, $1 million, $2 million that you can put as a down payment. And so you need
That's
to
right.
come up with creative solutions. So what were your solutions? How did you figure out how to buy without banks?
So, and you nailed it, Gabe. There's and hard stop here. There's no such thing as a very large landlord that goes to banks on a consistent basis, and so you don't only want to get creative, you need to if you want to scale. So how I did that was primarily owner financing, seller financing. I asked the owner to be the bank, and that always elicits a bunch of weirds, like, wait a minute. So it's just like a handshake deal or something? Oh gosh, no, this is real estate. There's lawyers and deeds and mortgages and promissory notes. And the one thing that I always try to hammer home to people is understand this. There's no difference between a seller financing mortgage and a bank mortgage, if you will. No difference, zero. And that's what people don't understand. So primarily owner financing. I was less sensitive for cash flow for interest rate. I bought a building once at 18% with 10-year financing. And people are always like, are you crazy? No.
Credit card debt.
Yeah, I know. You might as well put it on the credit card, right? So I did that all the time because I don't really care about the interest rate because for 2 reasons. Number one, who pays that? Not me. The tenants pay for everything. Of course, am I going to keep that financing? Of course not, right? So I'm going to raise my NOI and for every dollar at an 8 cap, let's say, for every dollar I raise my NOI is times 12, right? So whether I save money or make money, NOI doesn't care. So at an 8 cap, every dollar I make or save is times 12, right? So I'm highly incentivized for 6 months to, lower my expenses, raise my revenue, my NOI shoots up to here. And then of course I'm going to run, not walk to a bank to refinance out of that 18%. So I use interest rate in order to gain control of the building because I own the building now.
Yeah. And I kind of want to highlight that because that is something that I have just recently kind of realized the value of. I've only bought one property with bank debt. Everything else I've bought seller financing, but I've fought tooth and nail to get low interest rates.
Yeah.
But it means I lost out on a lot of deals that I could have closed had I been more willing to increase the interest rate.
That's
but
right.
what you just said is the crux of it. And I feel like that's something that I wish I knew earlier is you can give the owner of a property, the seller, higher interest rate if you can increase the NOI.
And that's the key. If you got to know your exit if you're going to do that. That's right, because you're dancing on a wire there. So you got to know your exit.
Yeah, that makes a lot of sense. And so when you do that, you always have to have a plan. It's not going to be instant. You got 6, 8 months, a year, 2 years,
and you're just hoping to even for that 6 months or so and not lose much money, right? But forever after that, as opposed to paying more for a property, right? So because your basis is forever. So interest rate's temporary. I don't have to keep it. Now, of course, there's things you want to know. So if you're going to do that, you want to try to negotiate, make sure your mortgage doesn't have a prepayment penalty, right?
But these are all things. I mean, if you're negotiating with the seller, these are things with a bank, you can't do that. With a seller, you can go to them and you're like, I don't want a prepayment penalty. I don't want it to be collateralized. I want it to be collateralized only by the property. These things can be negotiated with, but if you're talking with a bank, they're not going to
at
anymore.
all. That's right. And another advantage to seller financing is so Gabe, you acquire, you said mobile home park. So you have, let's just say, keep the number simple. You got a 10-year note with the seller at a reasonable interest rate, and you get 5-6 years down the road. You could call him up and say, "Hey, Ron, hey, listen, I got another 5 years left. Happy, to keep going. Or I got a little bit of extra money here. You want to just call it a day? I'll send you the money." You could buy it at a discount, right? You can't do that with a bank, and I've done that numerous times,
I just processed what you just said, and that makes a lot of sense as well. I haven't even considered doing that on the notes that I own, but it makes a lot of sense because if you're talking with a seller and you do, we have notes that are 10, 20 years even, you can approach them and just say, "Hey, do you want all this money right now? I'll give it to you at 10% discount." And then you'll save that 10% on the purchase price. Really smart. I like that.
Or even more. That's exactly right. And so that was the primary methodology in which I did acquisition. Another one, lesser so, but another one was master leases, which is never done. And I can't understand why. Master lease with or without an option.
Sorry, I didn't mean to jump in. I've attempted to do master leases multiple times, and I've had a lot of pushback from owners. What's your experience? How do you get them actually to accept a master lease?
So it's really just a sales job at that point, because you think about it. So I always look for things on the market for 60, 90 days. So it's not selling. And then I'll approach them, and a highlight to an offer would be, "Gabe, listen, I can give you, if I want to make the cash flow, and I want a 20-year lease, by the way, right? So I want a 20-year lease. So if I want more cash flow, I can dangle an option to you as the owner, saying, well, you're asking $495 for this 6 unit. Well, how about if I option it for $595, but I need $3,000 a month is my payment to you?" And so the owner thinks $595, that's $100,000 more than I'm asking. Well, I probably won't option it then, but I have the option to option it, right? So I can option it tomorrow, next year, 20 years, or never, right? But I'll dangle a high option number to appeal to your sense of greed. But how do I get you to do it? It's like, "Hey, Gabe, listen, you're trying to sell this building. Your current NOI is $4,000 a month. So how about if I just give you the $4,000 a month? But here's the thing, Gabe, you don't have to worry about any repairs, no vacancies, none of it. The only thing you got to worry about, Gabe, is where do I send the check every month for the next 20 years? $4,000. And guess what, Gabe? You still get to depreciate it because it's your building. So you get all the tax benefit with none of the management and guaranteed rent.
Right.
Now, of course, I need to make the spread. So the owner is typically, Gabe, you're responsible for your roof, your foundation. It's your building. So to get the headache, and we can close this up Thursday. We don't even need a lawyer. It's a lease, so blah, blah, blah. So, but you're right. You have to kiss a lot of frogs to find your prince.
Interesting. I like how you mentioned the depreciation there, because that is, if you can, especially if the owner hasn't owned it that long and it's still a lot of depreciation left on the building,
I know.
That would be a good incentive to give,
or
give them the tax value.
Yeah, you bring up a good point. Or how about if they have owned it a long time? Well, if they sell it outright, well, they got to pay all that back. Even in seller financing, by the way, they got to pay the depreciation in year one. You can amortize the gain, but you can't amortize the depreciation recapture. So if they've owned it a long time, they may be better off not selling it, because depending on a lot of variables, they may have to write a check to the IRS. That's a big number. And ask me how I know that, because I paid it, so.
I'm doing that right now. And I was originally going to give seller financing for this deal that I'm selling. But then I went through all the numbers and I was like, no, I just got a 1031 this. The taxes are just horrible. Just horrible.
So I'll tell you, I did the same thing. So when I sold a lot of buildings about 2-3 years ago, I sold 5 buildings in 1 year, and I held the note on 4 of them. But here's how I did it. So I'm the bank. And so I never thought, as I was acquiring these things, well, I'd sell them that way. And I got to tell you a couple things that, so I sold them, just focus on one building just to keep it simple. So I have a 6-unit I sold with seller financing. I owed $160,000 on the building. That's my mortgage. So how can I be the bank if there already is a bank? Like, I don't want a second mortgage. Second mortgage is useless, right? Because you can't foreclose as a second. So what I did was I I asked them to put 160,000 down. And of course, I used their money at closing. So I never got the money to pay off the first mortgage. But I did a 40-year mortgage. So I'm the first position now. I did a 40-year mortgage at 6.9% with a 10-year balloon. So the reason I did 40 years, because remember, we can do anything we want now, right? So I did 40 years because it keeps their payment low, so they get good cash flow, but also their payment to me pays off almost no principal, right? Because it's such a long amortization. So when they pay me off in 10 years or probably 9 years, they've paid off almost nothing, you know?
Why not just do interest only?
I could, yeah. It's whatever you want to negotiate. Yeah. Yeah. Be interesting. Yeah.
Nice. So yeah, that's always a really important topic to go over, especially for if you're new and you're just getting into real estate. Knowing and understanding your options, knowing that you can do seller financing is so important, both on the buy and the sell side. But let's go to the next question that I had, which is about. Actually, let's talk about the RIA because I feel like that'll be a shorter conversation. But it is interesting because I've been to plenty of RIAs. I actually started this podcast because COVID hit, and I had been going to these RIAs, and I wanted to continue to network, but I couldn't. And so I just started a podcast, which I really enjoy. And I always suggest people, if you want to do a podcast, do it because it's a lot of fun. But with those RIAs, they are very valuable. It's great to be a member, to connect with other people, both to see what they're doing and to kind of have them rub off on you, and to get deals done because there's people there that are going to bring deals to the table. So you owned one as both a member and an owner. What do you see as the benefits to both sides? Why would somebody want to purchase a RIA or start one of their own?
Yeah. So depending on the RIA, I mean, it's a business, right? It's got a profit and a P&L. So we bought it as a business. It's a revenue generating value add
membership fee.
Yeah.
Right?
So it depends on the RIA. About half the RIAs out there are nonprofit. They just get together and at a restaurant over coffee and just talk. Well, the other RIAs are, they're profit. We change lives, we do good, but there's a profit. So, we had a coaching program, membership, obviously. So we have monthly membership and yearly membership. And CT RIA in Connecticut was the 5th largest RIA in the United States. Most people don't realize that. And also speakers. So when speakers come and sell their product, a RIA gets a percentage of that. So, but there's also overhead, right? It costs you $2,000 to rent the big ballroom for that one night, and all the other overhead. So it's a legitimate business, but it's in the business of changing lives. And I got to tell you, I probably could count hundreds with an S of people's lives that we changed, some of them generationally.
Yeah.
And I got to tell you, that's a cool experience to kind of be on the front lines of watching people go from driving a forklift to 2 years later, they've replaced their job income because they bought 3 buildings without a bang, and that's a cool thing. And so when I sold it, there was part of me that was like, oh man, I hated doing that, but it's in good hands with this investor group. So, it was a neat experience. It's a lot of work though, too.
Yeah. Do you, would you recommend someone, say they've been in real estate for a couple of years, they've gotten their feet wet, they're kind of getting the lay of the land, they want to be networking more. Would you suggest that they start their own, RIA or meetup group or whatever, group?
It's a gap in the marketplace. Like if you're in Des Moines, Iowa, and I'm not saying there is or isn't one in Des Moines, but if you're in Des Moines, Iowa, and there's not any centralized local meetup and if you feel like you can add value by doing it, absolutely start it yourself. If there's an existing one that's fairly robust in your area, then perhaps you'd be better off just joining that one and mining that, human database, if you will. It should be required. If you're an investor, you should at least get to know your local RIA, because as you'd mentioned, that's where the deal flow is. That's where you can meet your eviction attorney, your closing attorney, your private lender, your hard money lender, and just partners and plus deals. So yeah, day one, hour one, join your local RIA.
Nice. So my last question that I wanted to bring up was, asset managing the 800 units. However, we are already at 25 minutes into the show. It is a 20-minute long show. So I do have to push us on to the quick question round. I'll probably sprinkle in some questions regarding that topic, but we're going to move on to the quick question round. Are you ready?
Go for it.
All right. It starts with education. One of the most important parts of real estate is getting a good foundational education. So if you could point to one educational anything, it could be a book you read, a conference you've gone to, mentorship program you've been a part of, anything, but just point to one educational content that you felt helped you the most.
For a paradigm shift, I'm going to say Rich Dad, Poor Dad, which probably a lot of people say, with good reason. So that would be my answer. That had a paradigm shift and a mindset, not so much real estate, but just in general mindset.
Yeah. That the many people say that one, but for good reason. And like you said, it won't tell you how to do real estate, but it'll tell you why you want to do real estate.
Yeah, that's a good way to put it.
Yeah, that was the first one I read too, and it really lit a fire under me. All right, next question is for your younger self. Let's go back to the Ron who was just getting started. I can't remember, back in 2005, I think you said. Go back to him.
Yep.
Yeah, go back to him, look him in the eye, give him one piece of advice moving forward.
Probably one piece of advice is to not take it so personally in your younger years. Rent is a day late and I'm seeing red. It's going to be a long life if you take it all personally. The person who shows the most emotion is usually the brokest one in the room.
Yeah. And I feel like that really just comes with experience. Eventually, you get hit in the face so many times, you're just like, whatever, I'll get over it. All right. Next question is about the U.S. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
So if I were, I'm out of real estate, but if I were to start back in, I'd probably go where the numbers make the most sense. I'd probably be in the Midwest somewhere, Indiana, Ohio. I think what you're going to see is a migratory pattern to the lower cost states. As people can't afford houses, even Florida, people are leaving Florida. It's expensive. So people want to climb the housing ladder. And I think the place to do that is in the Midwest. And, you get to Ohio and places like that. It's the numbers make a lot of sense. The laws aren't too egregious against the landlord. So that would be probably where I would begin my search and see where I end up.
I just watched a video, a YouTube video a couple days ago about Big Sky, Montana, and about how that city has gone from 30 years ago, 40 years ago to today. It is just it's so unaffordable.
Bartenders are in their cars. Yeah,
and the median house price, I think the median house price was $880,000, which is just crazy for such a small that's nuts. Anyways, moving us on. This is about lessons learned. Not every deal we get into goes the way we expect it. In fact, pretty much every time something's going to go wrong, and that's when we get to learn a lesson. So go back to your career. What was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
I bought a building one time, sight unseen. I was on vacation. The numbers made a lot of sense. So I pulled the trigger. Then when I put my eyes on it, and this was in the beginning of my career, I didn't realize what I was getting into. So go deep. And I was very comfortable buying, I'd walk it, and I'm comfortable buying it based on that, structurally and all that. But not seeing it. Yeah, don't do that. I messed up on that one.
The lesson there is and we've said this many times on the podcast, is always stick to your due diligence checklist. Make sure every single one of those things are checked off, because the buying is where you actually make the money, and if you don't go through that checklist step by step,
deal fever, right? So deal fever kicks in. You're like, I got to buy more deals, and so you start relaxing your standards, and that's what I did on this one. And
deal fever, I haven't heard it referenced like that, but I like that. And that's happened to me so many times when I really want to close a deal. And it's just finally you look at a deal and you're just like, oh man, I haven't closed one in X number of months. Let's do it. Yeah. You got to be wary of that. That one's, that is a hard one.
Yes, you do.
All right. On the flip side of that, sometimes things go right and it kind of sits in your mind as one of your favorite deals. So go back to that deal for you. What was it? And step us through it.
Well, gosh, I'm going to give you the last deal I ever bought. Was 2 years ago. from my couch in Florida, I bought an 8-unit building in Norwich, Connecticut. So that means it's commercial, 8 units, and had to go to a bank. They couldn't hold the note. So okay, I go to a bank, but an unemployed guy in Florida, no problem. It's commercial financing, right? That's the beauty of it. So I bought it for $360,000. Immediately had to evict. Yeah, good deal. But that's because the city shut it down because the sewer backed up. So I had to evict 5 of the 8 people. Then it was back online. The owner got it back online, but 5 people weren't paying. So I evicted them, rehabbed it, got the rents up to, with a partner. It's the only partner I've ever had. He brought me the deal and he did a great job. Brought the rents up to $8,700 a month and then sold it for $680, I think, within 6 months. And I didn't do anything. I was down in Florida. So yeah, it was an odd deal, but but I was in a position to be in position. So I took advantage of it.
Nice. And that just kind of shows you like the good deals are not going to be stabilized. They're not going to be, you just buy it and it sits there. They're going to have problems. They're going to have a backed up sewer. They're going to have
That's right.
low occupancy for whatever reason. And you got to solve the problems. And that's where you make your money, is solving those problems. So never shy away from a problem, but make sure that problem is baked into the price.
Yeah. We don't run from the problem. We run to them. That's why we make what we make. Yeah.
I like it. All right. And that leads us to, actually, this is the second to last question. First, we want to talk a little bit about, and I'm not sure if this is entirely relevant to what you're doing today, but I like to ask it anyways. AI is now, it's a new thing in these past couple of years, and I've been trying to implement it in as many places as I can responsibly do so. So I like to ask my guests, how are you using AI in your business today to make your business work better?
So I'm not really using it in my business today, but I do have a quick example. So I have been doing some hard money lending on mobile home parks. And to go, I have the lawyer doing the paperwork from the other side, but I use AI to go through the legal paperwork and identify things. Now I think we're in its infancy, so I'm double checking AI's answers and cross-reference Gemini with Chat, with Claude and all that. But wow, I wouldn't want to be in law school today.
Yeah.
Yeah.
We've that example has been brought up a few times, and I absolutely love it for legal review. I've given this example before, but we at one of our parks, we had a cell tower company approach us wanting to put a cell tower on, and we were like, "This is great." They sent us over the lease, and I'd never set my eyes on a cell tower lease before, and so I just threw it into Perplexity, and I had it review it, and then I threw it into Chat, and I threw it into Claude, and into Gemini. And I tried to get an understanding of what the problems were, from the owner's perspective, from our perspective, what we should be negotiating. And it did a great job. And we eventually reached out to a lawyer as well, but they just, they parroted exactly what the AI had said. And so
justify their bill. Yeah.
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 Nice. All right. Last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. First, tell us about Bulletproof Lease. Tell us about that business. And then how can people best get in contact with you?
Bulletproof Lease is exactly how it sounds. It's the actual lease I used in my portfolio. It's 31 pages. They initial 50 or 60 times. How sad that you need a 31-page lease these days, right? Some insurance companies use it. Some lawyers use it now. So I copyrighted it and I sell it on my website, bulletprooflease.com, for $159. And people think, well, that seems like, a lot. It's like, well, listen, you spent hundreds of thousands on a rental property. Call up your real estate lawyer and draft me a 31-page lease and see if that doesn't cost you at least $10,000.
And so the self-storage industry, I also own self-storage facilities. The Texas Self-Storage Association, they sell their lease, I want to say it's $500 or $700.
Wow.
You have to pay that annually. You don't get to own it. You're renting the lease. I think it's $500.
Oh, goodness. No, if you buy my lease, you own the lease. It actually comes in Word, so you can alter it. Because listen, there's 10,000 different laws throughout the country, right? Laws, customs, and traditions vary everywhere. So you need to be able to edit it for your local situation, and you can. Bulletprooflease.com. I'm become kind of big on TikTok, I guess. TikTok, I don't even know what it is. Bulletproof Lease. I don't post a video every day, but almost every day, and I just try to do these little micro tips like I gave you every single day. Some of them are stupid, but they work. So that's me in a nutshell.
All right. Well, I will put that link in the show notes, the link to the TikTok channel and to Bulletproof Lease. Pretty easy to remember, though, bulletprooflease.com. So if you guys want to reach out, all you got to do is click the little more in the description. It's going to pull down that full description. And in there, you can find Ron's links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Gabe, thanks for having me, man. It's been a blast.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe, at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review, a comment, anything like that. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.